Welcome to the Millionaire Money Mindset channel. If you like the video, please hit the subscribe button and the bell beside. It helps us spread the word and reach out more like-minded people like yourself. When you think of investing, the first thing that comes into mind is this complicated world of the stock market. With so many charts and numbers, it's easy to get confused. So, let's break it down and try to make sense out of it. Let's say you have built a business, but now you need some more money to expand, or maybe you just want a private jet. Where do you get the money from? Here is an idea for you. Why don't you break down your company and sell part of it while you keep the majority to stay in charge? That's what the stock market is for, and this process is known as initial public offering or IPO. But how much money can you make? Let's take an example of Mark Zuckerberg's little toy, Facebook. It went public in 2012 with 337 million shares at a price of $38 a share. Not bad, right? But, when he realized that there are so many more people who want a piece of his pie, he added another 84 million shares, 421 million. And guess what? He sold every single one of them and raised $16 billion. He literally became a billionaire in just a few hours. In fact, the stock price increased to $45 within the first day of trading. It seemed like Facebook was doing great, but it was too early to celebrate because it fell back to 38 by the end of the day, and that was just the beginning. The bad news was just starting. In the next few weeks, the stock crashed to as low as $20. Half of its original price. Now, to understand what's happening here, we have to get to the root of the stock market. In the past, stocks were acquired primarily for dividends. Theoretically, when you buy a stock, you become the owner of that company. Which means that you, like any other owner, have the right to the profit of the company. Congratulations, you have purchased 10 Facebook stocks in January of 2017, and you are now the owner of Facebook, exactly like Mark, and I am not kidding. So, your company, Facebook, makes $15.934 billion. How much of that belongs to you? At the end of the day, you have spent $1,300 to buy your 10 stocks. Facebook stock price in January 2017. But let's first take a look at how many stocks are there in total. It turns out that there are almost 3 billion of them, 2.956 billion. I doubt that your 10 stock matter now. But let's be optimistic. Because, if we divide the net income on the numbers of shares, each stock should earn a little over $5, 15.93 billion divided by 2.95. By the way, that's known as EPS, earnings per share. In other words, your 10 stocks are supposed to earn you almost $54, 53.9. Not bad, right? But that's just hypothetically. In practice, you get nothing. The board of directors are the one who are going to decide what to do with this money. And their first priority is to fill their pockets and expand the company, so no one really cares about your 10 stocks. But don't worry, not everyone is as cunning as Mark Zuckerberg. For example, in 2017 Apple paid $13 billion in dividends, or $2.5 for each stock. Of course, it's not much for a stock that costs $170, but something is always better than nothing. However, today, it doesn't really matter how much the company pays as much as the price of the stock. Apple's stockholders experienced a 33% gain within a single year. That's way better than market's average. You probably have already heard that Apple is the first company to cross $1 trillion valuation because its stock price crossed $200. But what if I told you that until June of 2014, Apple's stock price was $645? Does that mean that the company was already valued at more than $3 trillion? Oh, God, this stock market is so complicated. Let me explain. There is something called stock splits. Each stock was split into 7 pieces, and the prices were decreases proportionally. Technically, nothing really changed. But now more people like you and me could afford the stock and join the community of Apple investors, since the stock now costs $92. But not all companies do that, some prefer to only work with serious people such as Warren Buffett. His company Berkshire Hathaway has never split their Class A stocks. That's why a single Buffett's Class A stock costs over $470k US. I guess most of us will never join Buffett's Secret Investors Society. But don't worry, Buffett wouldn't mind taking your money as well. That's why he created Class B shares, which are more affordable, that are currently priced at about $300 US. The topic of the stock market never ends, but this video has to. If you like the video, please hit the subscribe button and the bell beside. Thanks for watching, and see you in the next one.